welcome to part 2 of our episode. This is Slot Leader and I'm your host Umed Saidov. We will continue talking to Colin Edwards, who is the quantitative analyst at IOG, and in this part of the interview, we'll be focusing on interest rates, we'll be focusing on the governance structures in cryptocurrencies, and we'll cover a range of issues in cryptocurrency markets. I would like to remind our viewers and listeners that this show is for educational purposes. Nothing that we say or do in this show constitutes investment or financial advice. I've worked in overseas and emerging markets a lot, and one of the greatest sort of impediments for this type of investing in emerging markets among the traditional finance people and companies is the fact that you do not trust the regulatory environment or the government, right? As you mentioned. And the second layer is that even if you are in a place where there's an open and welcoming sort of government that wants to uphold the rule of law, the question becomes, how do you gauge credit worthiness? Well, in the States, like it or not, we have, you have lots of problems with this, metric, but we have credit scores, right? That determine your eligibility to get credit, and the higher the score, the lower the credit, the lower the risk, and the lower your cost of borrowing. Now, in emerging markets, that type of data does not exist. And I think blockchain, one of the fundamental things that it could do by onboarding the entire nation or, into, something like Cardano, you could create that, statistical, historical data that you could carry anywhere you want, and it would be with you, and you could have a score that no government could tamper with, or whether it's one governor or one president or another, it wouldn't make any difference, because it's in a neutral territory that has nothing to do with the regulatory regime. So in a sense, it will make people more self-sovereign in that regard, and make them more investable. If you are a coffee farmer that has that track record, regardless of who is in charge, you will be able to work with that person. Obviously, as a bank, you would have to take into consideration, or as a financial institution who is lending there, you could take into consideration the demand and supply and the regulatory regime for that particular sector. But the question of credit worthiness that hinges on the person's ability or willingness to pay would at least be partially solved. So by technology, and I think that's a great unknown that will be taken care of. That will reduce the cost actually for people who would otherwise be, encumbered by really high rates. And so, yeah, I mean, I think that choosing and picking the areas where you definitely have the biggest bang for your buck. In IOHK's case or IOG's case, would be the best way to go. Finding a couple of countries that are open. Once you have that pilot project going, I'm really looking forward to seeing what comes out of Georgia. I think it's an amazingly receptive government there. And then you could replicate it. That's the beauty of it, right? You can just copy and paste, boom, and you got.
Yeah, I think that picking good projects and partnerships that kind of push forward that message and that we can build on is really critical to the success of the platform. And because I think that there's two parts with that identity issue. And one of that is you want to be able to share your information, but I think there's also this sense that you should own your own information. You shouldn't just give it to companies that are going to turn around and resell it. You should choose who and how to share this information in a way that you maintain control of it and preserve the privacy. And I think that element of it is the other thing that blockchain answers is, sending a photocopy of your bank statement to somebody is, I think that opens up a lot of questions about identity theft. Is it out there? How are they handling your data? what are they going to do with it on the far side of it? And I think that the blockchains, to say, can I ask on chain if this person can verifiably, and I think that there's a bunch of very interesting cryptographic techniques, kind of these zero knowledge proofs that are very exciting as well in that area. And so opening that up, and I think identity again is really important, because right now, if you have a pseudonymous or anonymous even relationship, there's no kind of downside to defaulting. You just open up a new identity, so that kind of building and preserving an identity, an economic identity that you can use over time. Is true in credentials, whether it's academic credentials, online coursework. How do you verify that this person has done what they said they've done? I think it's a problem that companies face when hiring. That how do you, if you claim that you have a doctorate from this degree, how do you prove that you actually went there? It's I think that as we look at a more global situation, those are harder to answer questions, and blockchain has great answers for opening that up.
Colin, can you tell me if you've noticed a price correlation between the traditional markets and the crypto? And lately, I've noticed that. And do you have any thoughts about that?
I think there is, and I think there's really good reasons for it. And part of that is kind of a sense of people looking for reflationary assets. As governments are printing money, what do you do with the money that you have? Is something more of it's produced, the money that you have is less valuable. So I think people are looking to place money in ways that will, maybe not even take advantage of it, but maybe will preserve value. And those are going to be assets like equities or like cryptos. And I think that's certainly one large trend. And they're also going to be looking for things that again are generating value, and that tends towards kind of technologically innovative companies or platforms. So I think that when you look at those correlations, the kind of traditional brick and mortar economics are going to vary from companies that are perhaps doing new things, more innovative things. And so right now, yes, I think there is a very tight correlation. I think partly that's due to the way the economic nature of things is going. I think that it is creating a divergence between this traditional stock market and even cryptos from the core economy, because assets are kind of flowing preferentially into places where they might preserve value. So those are things that are definitely, I think it makes sense. And they'll probably continue for a while. There are some challenges. I think the US election could change a lot of things in the crypto world. Governments, one of the main things they can do is tax. So if the government was to come in and say tax capital gains differently, that might make cryptos more attractive as an asset class. If they were to start taxing cryptos, as a US citizen, I noticed on last year's tax return a very prominent question at the top of do you own or hold cryptos?
Yeah, that was the first question.
I think that it's in the headlights of are cryptos going to be taxed, or how? And I think the question is really more, how are cryptos going to be fairly taxed and evaluated? Those are not will it happen, but what's the nature of how that's going to happen? And that could, of course, be a very negative impact. And
yeah,
of course, nothing could happen. We could be in for another 4 years of just same. So I think there's a lot of uncertainty, but right now, I think certainly the equities markets and the crypto markets are trading on the same winds are blowing both.
Yeah, I think that kind of kills, if not diminishes, if not kills the idea of crypto being a hedge against the traditional markets or economies, and being an idiosyncratic sort of asset that you could hedge your normal portfolio with. And I understand that from a point of view of anomaly. Nowhere. This is the first time in the history of the United States where so much money has been printed. And I can understand why this is happening, but the case no longer be made, even though it fundamentally exists, looking at prices, the case can no longer be made that these assets provide hedge. Because you look at equity markets where bankrupt companies are with no cash flows, right, or severely impaired companies are fetching ridiculous, multiples. You start questioning yourself as a professional. I'm a CFA charter holder, and quite honestly, this market is making a joke of my profession, because everything that I've learned is telling me that the economy is in peril. It's going through a deep sort of restructuring or reorganization because of the fact that we had this COVID as a one-off sort of event that derailed a lot of earnings, a lot of demand. It just killed a lot of demand. I mean, I live next to New York, and I see on the streets, you multiply every single restaurant that's not making its revenue, and see how it reverberates across the country. And you see that there's a lot of unemployment. There's a lot of problems because of the fact that there's no demand. Yet the stock market is going up and up and up, and it's just surpassed its all-time high. And it just doesn't make sense, to be honest. In that environment, I would say that even blockchain for regulators that are really wise and think long-term, blockchain offers a way out. It's a place where you could actually see growth in the face of COVID or whatever you call it, because blockchain is inherently online. There's nothing that you have to go to work. As a stake pool operator, I'm getting paid by a protocol, right? I don't have to be anywhere, but I could pay taxes on that, right? I could, if the economic activity moves into blockchain platforms like Cardano, it could be a way out of such, eventualities. What are your thoughts about that?
Well, I think there's the markets, the crypto market is probably a lot more diverse. I think that when you look at platforms like Cardano, in many ways, it's going to be very similar to traditional markets. Economic activity, drives demand for currency or trading. And so the platforms that facilitate exchange and trading are going to be impacted much like traditional companies. And I think that's true of chains like Ethereum or other types of lending. And particularly when you see a global slowdown rather than regional ones. I think COVID's unique in that sense. It's very much a global phenomena, and there's no, everybody's kind of in the same situation of dealing with lowered productivity, lockdowns. And so to that extent, I think that many of the crypto coins are in very similar ways to other equities, quite the same business cycle is affecting them. Now, other coins and things like stable coins or other types of assets within that ecosystem are going to behave very differently. And so that the opportunities that, new financial instruments that could come up and be on the blockchains do offer different opportunities to people than they currently have. But I think that to expect that blockchain is going to be uncorrelated, at the same time, people have a narrative of blockchains eating the banks. Well, they're going to face the same struggles as the banks if they're trying to eat the banks, right?
Yeah.
You can't have it both ways. So to me, it feels quite natural that blockchain is increasingly correlated, particularly Bitcoin, in the sense that it's the most prominent of the assets and is out there with equities. And
I mean, you can make a case, Colin, though. I mean, you can make a case for uncorrelatedness of demand for cryptos because it's global, right? At least from a U.S. perspective, right? You can say, all right, my assets in S&P 500 are driven by the demand in the United States because mostly that's what people, or maybe Europe in that regard, but the market for crypto is global. Anybody with a phone can buy it, right? And that should at least introduce some sort of counter action for the demand that you see in the developed markets.
I don't necessarily agree in the sense that I see when you're looking at crypto, there are people that have money to invest and are looking to invest it and get a return. And those tend to come from, let's say, Asia or the United States. And those markets tend to be very dominant. And the US, in particular the US stock market, is something that I think the whole world invests in the US stock market as a store of value. And the US dollar has kind of benefited greatly from being kind of the reserve coin. Even when you look at stable coins in the crypto world, I mean, it's the US dollar, you know, that's the
Yeah.
reserve coin. And so, you know, I think that is you know, a generally a reliable economic system. There's a trust in the companies, that the companies are reporting their economics accurately. Um, so those are things I think that are there. And I think that even looking at cryptos, there's a lot of value in using them to say take funds from Western economies to invest in less developed economies. But that does, I'd say, be a transfer, you know, of people that have money looking to invest with people that need money and have big problems. Because, you know, I think the investment opportunities in regulated economies have shrunk. You know, there's a lot of money out there. The governments have been printing a long time, and now it's pretty well tapped the market out. Anybody who's got a great idea or needs funds has had access to them. And now the question is, how do you open that up to people that have real problems to solve? And that's going to drive the next growth cycle.
Oh, that's interesting. That's quite, you know, the, the type of news that we would like to hear and dominate the headlines on crypto markets. Hopefully, at some point, it will start. The media is going to start paying attention to these kind of things. In the mind of a traditional investor, right? If I'm investing in bonds, I'm getting a yield, right? It's a yield that comes in forms of cash flows every 6 months or a quarter, depending on what the terms are. If I'm investing in an equity, I'm going for the growth that I can see and feel, and I know that there's a demand that is being met by the company's operations and company's product. That there is a CEO that is looking after the company to minimize the cost and maximize the returns. There's a strategic direction in that in that company that maximizes my value as a shareholder. And finally, I have a way of verifying everything. There's plenty of information out there for me to make a judgment call as an investor. Now, with coins like crypto, that like Cardano, which does not have necessarily any cash flows, and coins that accrue their value through the demand only, as utility tokens. How do you convince people? What kind of mental frameworks would you recommend using in order to make an investment case for them? Because, like it or not, as somebody who is trained to see cash flows and use the discounted cash flow analysis to make a judgment call whether an investment is good or bad, I find it hard to come up with frameworks to evaluate these kind of assets. What would be the closest thing you would use in order to evaluate these assets?
Well, I think that's a couple of questions, and I tend to agree with you. I think that it's created a lot of questions about why would you want to hold a token. And I think that there are people that would hold, let's say, oil or gold or Thai baht in their investment portfolio just as a way of kind of preserving value. So there is certainly that value preservation case, or just having some sort of thing that holds its value. But I think beyond that, you've seen a couple things happen. I think that staking and this kind of yield farming business is sort of showing returns on these platforms. So, and in fact, staking, I think, is moving more towards the fixed income like assets of, you're supporting the platform, and by staking, but when you're staking there, you're kind of voting for reliable operators in the platform and you're getting rewarded for it. But more than that, I think that it's kind of like investing in a road. Even though the road is never going to be a toll road, it enables economic activity. So you're kind of placing a leap of faith on the fact that we're going to open this road between two cities, and then suddenly we can start trading between two cities. And the value that you're creating is going to really be quite large because you're able to enable trade in a way that hasn't before. And I think this is also really important on why I'd say coins and coin projects also need a bit of a mission. What are they trying to accomplish with social good? And one of those is, I think looking at economic inclusion and activity, it's something that people may support. And there's going to be a lot of money because, if you're investing in people that personally they need money, they could generate a lot of value and innovation. It's going to be over these platforms. So I'd see it as kind of investing in that infrastructure. And then there is also kind of the value. I think this comes back to sort of being a lemons market still. Most cryptos are going to be very underpriced because there's just a lot of dodgy ones out there that it's hard to tell good ones from bad ones. And so the people that are doing the due diligence about platforms that have good technologies, that have good missions, good views on potential applications, those are going to be undervalued and see some appreciation just in straight value. I think that's something that's very clear, is that nobody can tell what is good or bad value. And so there's going to be some capital appreciation. And then there's going to be, I'd say, things like staking or yield farming, much like investing in currency, so that you hold dollars, but you can invest them and get a return on it. And cryptos are going to be very similar, that people want to use them, will pay you a return for borrowing them, and a store of value, to separate it out. So those are all things. But I think the biggest thing is probably that kind of build a road approach. We need a bunch of money to build this economic system that people can use, and that's going to benefit everybody. And I think that people have to start thinking bigger. Those are not people that are going to look to, how do I maximize return right now? It's going to be people taking a long-term view of something it's going to be great for everyone when we get it to happen.
Yeah, I mean, sometimes when I think about portfolio, the platforms like Cardano, infrastructure comes to my mind definitely. And somebody who's invested in infrastructure, I can see the telltale signs of those kind of projects present in Cardano. The thing that comes also to my mind is that, what if SMTP was tokenized, right? SMTP is a protocol that we use in order to send email. What if every time you send an email, you sent a tiny fraction of something of value to a treasury or something like that? And I think thinking in those terms actually helps, because imagine the amount of wealth that would be amassed on the protocol level to SMTP or SMTP coin, let's call it that way, or HTTP coin. And you don't even have to have a very expensive sort of transaction cost in that regard. You could just have it a fraction of a cent. But the fact that it's utilized all over the world as a single standard, and people use it because it facilitates anything from sending an email to downloading a movie or doing a transaction with your bank. You could see how this value proposition as an infrastructure could create enormous value. And I see Cardano's value as value proposition as that. Yes, you do not have cash flows, beyond staking, but in and of itself, the coins like this in Cardano, they can't be siloed or pigeonholed into one or another financial instrument. As you said, it behaves like a bond in a sense when you buy it, because there's cash flows coming in. But that's not its main value proposition, because the cash flows are there in order to sustain the network, to create some economic incentive for stake pool operators to sustain the network, to run it. But eventually they would be minuscule. They would be there, but at some point you will see the uptick in demand, replacing the value generation sort of narrative there. And you could have very little in terms of absolute number of coins coming into your, staking address, for instance, because it will be mostly driven by transactions. But in terms of value, they would have a lot of value. And as the economic activity grows in the system, that would hopefully drive the price of ADA up, and thereby increasing sort of a high value your returns beyond what you could actually earn by just staking.
I agree, and I think part of that is taking a long-term view on where you want the economy to grow and ability to shape it. One thing about cryptos, and particularly some of the things like the on-chain voting that we're working on, is it's a way to influence and change the future. You don't need to, as an individual, say I'm at the mercy of big banks. I can be part of this decision process in a way that is organic, that grows over time, but I can take personal responsibility. And I think that people that like that message and want to contribute to it are really, people that we would like to hold the coin, not people looking to flip it for a quick dollar, or who are looking to go to the moon in the next 2 months. I mean, that'd be nice. I'd love to have the price go to the moon. But really, I think people that should be holding these coins are the people looking long term about, I want to do something important for the world. I want to do something better. I want to have, be able to personally contribute. And I think that individual action, I don't want, some sort of pension board choosing the head of the company to maximize returns to run the company because that's what he's getting paid for. I think we've seen a very short-sighted trap in the way companies are run. And when you think about what's a better way to run a company, I think that's an answer that these decentralized organizations do very, very well. And they do it in a way that doesn't rely on the government stepping in and having heavy-handed regulation. And I think that's a great thing.
Yes, yes. Governance is another thing, Colin, that you could see that it could be a great enabler if structured right. But it could also be a disaster if not structured right. In the case of Bitcoin, I see their off-chain governance as an impediment for them to grow and improve the protocol. They're kind of stuck in their one-way sort of in the old ways in many cases, and there might be cultural or ideological reasons for that to exist, but I think they definitely lost the narrative around Bitcoin being a peer-to-peer cash, digital cash, because that is no longer the case. If I were them, I would definitely pivot to digital gold narrative too. But and they definitely have the network, but governance, I would say, is the hardest thing in decentralized networks, because it could potentially be hijacked, right? As you said, if lots of bad guys come in and start shaping the direction of the decentralized blockchain, then you might be in trouble. And how do you account for that is a good question. I'm glad that we are doing a lot of experiments early on with Catalyst, and I really like the voting structure that we've put in place so far. We'll see how it goes, but the early results are kind of inspiring, I would say.
I think it's been very good. I think that's been a great project, and it's one that I think is very exciting because it gets people on board. It gives them some ability to play with it and some funds and economic freedom to do so. And that's been a huge success. And, I think one thing I just want to jump on, I think that we need to stop talking about coins as companies. There is no Bitcoin Incorporated. There is no Cardano Incorporated. I mean, we do have a Cardano Foundation that's looking after the coins. IOG's an engineering company that is highly related. We're quite emotionally invested in it, but we are not Cardano Incorporated either. I think we are big players in the ecosystem that are trying to do a good job of sort of the governance and getting it off to a right start in life. But I think that there's also kind of that at some point, or a realization that we're going to need to step away from making all the decisions. And it's a hard growing up decision to see your children fly on their own. And so that's, I think when we talk about Bitcoin, it's not Bitcoin Incorporated making marketing decisions. There is a foundation that is setting some direction. There's core developers. But same with Cardano, it's a cooperative project. It's one where we rely very heavily on community engagement, and that's going to have to come forward in the future. I think that and having that split of a natural transition, the way we talk about it, of IOG versus Cardano is two separate things, I think is healthy. That's going to help the ecosystem in the long term, as you know, and even right now, there's Emergo and the Cardano Foundation. So I think that's one of the things that got Cardano off to a great start, is it's not Cardano the company. It is a set of companies that all have a shared interest in cooperating and making it work. But there isn't even right now a single governing entity. I know Charles is kind of the strongest spokesman, but you know, I think that's probably very important to get out there too with these coins. Is it's not, you're not funding Cardano the company. You're founding a cooperative effort that everybody's working together to do something great, and
Yeah,
I think
that's
that's exciting.
yeah, that's the nature of decentralized projects. I mean, there's no single entity kind of you know, pulling the strings. In the case of Cardano, we just have a way of, you know, transparently capturing that voice, the community voice. You know, weighted by the number of coins you hold, of course, but in other, you know, ecosystems, you know, be it Ethereum or Bitcoin, you know, everybody votes with their own, you know, the developers vote with their actions, the miners vote with their actions too, of accepting or rejecting a you know, BIP, whatever. And I'm sure that there are a lot of iterations in that ecosystem that everybody comes to a consensus, and then if they have 50%, then just basically the chain moves into that new state. But in case of Cardano, I think it's more seamless. I think it captures also a greater number of representative vote. My concerns, you know, as somebody who might be looking at it critically from an outsider point of view, let's say if I didn't know the ecosystem that well, I might be concerned about, you know, how, for instance, we disperse the treasury funds, whether there is a proper vetting process for projects, you know, whether professionals are evaluating them for impact. You know, the guidelines so far are a little bit, you know, I would say wide, and that's expected for a project like this, because innovation itself should not be curtailed by any type of structure that might hinder its, you know, capabilities in the long run. So the types of questions that you're asked to you know, if you're doing a proposal are very sort of open. And you know, my sense is that that's intentional in order to create the widest possible net, to cast the widest possible net in order to capture that value. And yeah, so that's basically what I would, you know, the only thing that I would be worried about if I was an outside investor is like, how are these capital decisions made? You know, you have 256 projects, potential projects in what if the majority of people, the herd, decides that something that doesn't create value or you know, gets approved, and that iterates over many sort of funding cycles. And how does that, can we make the, I guess the question is, can we make the voting process to generate the highest return, economic return, to the platform? And that's an open question, I guess.
I think we can do some analysis around it, maybe bound the problem. But I think one of the challenges of working on a platform is that the actions of the people that are using the platform drive a lot of what happens. And so we're kind of in this constant cycle of reevaluating, what do we do, you know, and how do people respond, and where do we iterate it from there? And I think that's just you know, talking about community engagement and speaking to people, and particularly while we're still sort of in a caretaker mode for the platform. And that is, you know, there's a clock that's ticking down on that for sure. You know, we're trying to do very, you know, be very open and try to engage people much more, and not just take a hard, you know, this is what's best for you, we know best platform. And that's hard because we have opinions and
Yeah.
we struggle with it. And I think, you know, trying to get a good balance between getting the platform off to the right start, getting the right people engaged in the community, getting the right community. I think is a really strong one. And some of that is a bit of an act of faith, that we will let people do the right thing, and ask them to think critically about what they want it to do and happen. And
Yeah.
I think that's, it's kind of that process of growing up, that you kind of have to let some things go and see where they go. And, we want to, with our own actions, lead the way. I think that's really important. We need to be doing the right thing. The way that, for example, we're operating on the platform, the kind of things that we are personally choosing to pursue should lead to direction. And that's something I think that within IOG is something that we buy strongly into. And it's just, how do we make it happen and keep ourselves honest?
I can name a couple of platforms that have done that. I think the best way to do is to handhold and then start releasing the control as you see progress towards decentralization and towards responsible decision making. And with the funds, it's the same thing. I think it will take a little bit of time for the governance structure to get where it needs to be, because I think there will have to be just like we have in the ecosystem of staking. The stake pool operators represent the vote, let's say, of stakeholders, right? In the protocol. You might have a second layer of governance where you will have a panel of experts that will gain prominence. Maybe you have these, I think Charles talked about this, a second sort of a token or importance token, where you as an expert in a certain sense, start getting votes of confidence, and if, let's say, that there's an issue that requires your input, and your input and your approval, let's say, is on chain, and you would be able to track the person's progress, and maybe there will be a job where you would be part of a consortium of people approving or approving or not approving a project based on their economic or multidimensional merit. Let's put it that way, because there's not only economics in play here when we talk about projects in Cardano, but also the wider impact of where we want to go as a platform. Which itself needs to be defined, I think, which is the hardest thing for me to grasp. It's like, where are we going to go, right? So for me, it's the mission, and then you got the strategy, and then you got the projects that feed into that strategy, which the strategy feeds into that mission. And we try to do something like that with the new roadmap that we kind of created for the Cardano Foundation. But we'll see where it goes. But as a community, we have to sort of come into an agreement about the strategic direction. Because one thing that I cannot understand or accept as somebody who comes from the finance world is that platforms need a direction, some very wide, kind of a set of guidelines about where they want to go. For instance, I don't see CryptoKitties coming into, I wouldn't want to have the CryptoKitties coming into Cardano. Yes, it creates demand for the coin. Yes, it might drive up the price, but that's not what Cardano is all about. We're trying to solve problems here. And yeah, look, CryptoKitties, satisfy the demand for, for a digital token that's rare and irreplaceable or unique. But I think the potential of the project, the potential of the platform, should not be wasted on projects that do not directly feed into this grand vision that we have for it.
I think that just kind of calls out the need to have maybe stronger differentiation between the platforms and then the applications in the platform. And I see CryptoKitties as a token. It's an application that people use, and I'm not going to judge. If that's where they want to take it, I'm okay with it. I think that part of that is I'm not going to judge. I don't think that's where we want to go internally. I think that we want to look at higher impact things. I think that I would like to think that the platform will do more than be a CryptoKitty venue. But I think that there's a demand for it. People can use it for that, and that's okay too. I think we have to say that it is going to be used in areas that we may not know, or maybe can't even know, and we want to keep our flexibility on that. But
Yeah,
I think
the
when you look
image
at the platform versus the tokens on it, there's going to be some crazy tokens. I think that, things that show real economic utility and value are really important, particularly at this stage in the life cycle of, where people can say, I can see how this is important and how this makes a difference to people. And, so while we could say, I wouldn't rule out CryptoKitties, that's probably not what's going to drive adoption. That it's going to be real value, making a difference to people's lives, and having a good story around that.
I want to close off this discussion, Colin, with your prediction in interest rates and how they could affect the crypto markets in the medium to short term.
I think governments are kind of stuck in this interest rate trap. I think that there is no exit plan from this printing money and the quantitative easing. I think that that's a one-way road, and it's going to take something really significant to happen. And at the same time, I think that there's a lot of people that are looking for returns on their money, and that are using that and planning for that long term. And so, I think one of the great things about crypto is that transfer to other economies that have been, up to this point sort of uninvestable, whether it's due to currency risk, due to dodgy government risk, even if it's a great government, what's the next one going to be like? That, when you look at Western governments, you think the strength of the government is not, kind of electing great leaders necessarily, as having a way to get rid of bad ones, and you don't always have that confidence in other countries, that
Once they come, they stay.
that's right. So I think that there's that transition of even if you've got a very forward thinking government, is that going to be the same government there in 20 years? And I not to mention a country like Turkey, but where maybe that you get countries that are changing, that have opportunities there. Just talking about where you get strongman rulers in and maybe change it to a different state.
Yeah, I lived in Turkey, and I would say that I would transfer every time I got paid. I would transfer the money out because I did not want to have the risk of the banking sector there closing down and me getting trapped with the currency regulation there and whatnot. But there's one other question.
I think that interest rates, I think that's going to be the great story for crypto, because it gives you an answer to what to do with investments.
Yeah, that's fascinating. If there's any type of points that you would like to make that you haven't had a chance to make, Colin, this is the time to do it.
Well, I think the main point is people should be thinking long term with crypto. I think that when we're looking at what drives economic value, it's not just a net zero proposition. There's actual value creation, and people should be looking at cryptos and thinking about what are the cryptos that are going to be driving the creation of this value, new, expanding economies, new products, new ideas. And those are going to be things that fundamentally long-term are going to, just increase the pie. We're not just buying low and selling to the next idiot along. You've got to really look at what's going to be things that increase this pie for everybody, and getting a piece of that increasing pie. And the other thing I think it's very challenging about cryptos is there's and it's reassuring, but it's also very challenging, is that level of personal responsibility that, investors that are coming from Western countries tend to have this faith in companies that they can almost just chase highest yield. They don't have to think about, is this a scam? Is this a real company? Is this sustainable? So there is that element of personal responsibility in, be your own bank, be your own financial system, but you also have to do some of the things that you take for granted in banks and financial systems. And that is that due diligence of, who are you trading with? Do you trust them? Do they have a good message? And those are things I think Cardano's got great answers for. And I think that as we mature as a marketplace, and talking about cryptos generally, those are things that I hope really start to become more front and center in the public mindset.
It was an enormous amount of honor and pleasure to talk to you today, Colin. And I hope you join us down the road when we have Goguen or some important development.
Sure, and I'm happy to talk on a variety of other things, including risk management in general, how it applies to cryptos, or talking about systematic trading. It's certainly a passion of mine. It's not my role at Cardano or IOG, but it is something I have a strong interest in of how to build and run sustainable, systematic, and algorithmic trading. And it's always fun to talk about that too.
Thank you for watching and listening to today's episode of Slot Leader. If you like the content, please don't forget to subscribe so you could catch the next one. See you next time.